Hey everyone, we are on for topic number 3 with Greg Dickerson. How you doing, sir?
Doing great, Michael. How about you?
I'm doing well, man. So one of the videos I did over the weekend is a topic I'm going to ask each of my experts. So you're first up. So here we go. And that is going to be, hey, new administration, right? Joe Biden is in the White House. He's already signing executive orders and all this stuff is coming. How are you planning to make a lot of money in the next 4 years, right? In the first or in this Biden administration, you already have a plan. You already see what's coming because things are going to change. And I'm just curious what you're going to do.
Start a SPAC, start a hedge fund, and have a couple of IPOs. Because there's trillions of dollars coming into the markets, and it's just like taking candy from babies. And start a government contracting business, and doing that. So no, it's hard to say. So we do know that. I mean, if I could do it all over again, people ask me, if you could start over now, what would you do? And I'm telling you, if I could start over right now, I would go straight to Wall Street and I'd start a SPAC, or I would, get into investment banking because the money is so free and flowing and everybody's looking for yield. It's just unbelievable right now how easy it is to do these things. So I would go in that direction, but that's going to be short-lived. It's not going to last forever. The next thing is government contracting is real. So there's going to be some infrastructure spending at some point, but caveat to all this is we don't know exactly what's what yet. We don't know exactly what's being proposed. We don't know if it's going to get through. We do not know what the tax climate's going to look like. Is 1031 going away? Opportunity zones, are they going to be affected? All of these different things. Tax and Jobs Act, is that going to go away? So we still really don't know. We don't have full guidance yet, but we do know there's going to be a lot of spending, and it's going to be infrastructure. It's going to be in the markets, and it's going to be for social causes. So in those areas is where the real opportunity is for free flowing money to capitalize on. So that's where you should be looking.
So, okay. So again, if you're a contractor, you run that kind of business, I assume there's some kind of certification, or you got to get on some list or something to become a government contractor. Do you know?
Well, yeah. So generally they're going to go to it's called SWAM, small woman owned and disadvantaged businesses. So if you're, majority owned by a female, majority owned by a minority, something like that, small disadvantaged business, so you can get what's called SWAM certified, SWAM. And then there's other things that you can do to get into the pipeline and get your company pre-approved for a certain amount of contracts, because there are certain contracts below a certain level that don't even require bidding. They can just issue them for vendors, for contractors, things like that. So if you're in business, I would look at getting yourself certified at the state and federal level so that you can get these government contracts. And then, again, if you're a vendor supplying certain services, it's even no bid contracts if you're pre-approved and pre-certified. At the federal level, there's different things that you can go through to get yourself qualified there. Or you can work for other contractors that are already approved and certified. I can't remember what the certification is for the general contractor, for these things that then turn around and subcontract, and they can subcontract out to anybody. Yeah. So that's one area to be thinking about. The other one is real estate. So if there's a $15,000 tax, first home buyer credit that gets, passed, that's going to be huge for an already stressed real estate market. So that's another thing to be aware of and just kind of pay attention to. And looking at the fine print on that first time buyer, it's not first time. It's like first time in so many years for people that will qualify.
I heard 2 years is what I read, right? If you haven't.
Yeah. So if you haven't bought a new house in like 2 years, you may have owned 20 houses, you can get that credit.
Man, if that happens, and if that happens, that could go down as one of the worst policy mistakes ever, because adding that kind of fuel to an already overheated market with no supply, Jesus, I couldn't imagine, right? Affordability is going to go down. And that's what I'm really thinking about is, I guess what I'm seeing is a lot of spending. There's going to be some more asset inflation, right? The money's going to chase yield. So real estate, I think, goes up. It's a hard asset. I think actually
interest rates should stay low.
Let me ask you this on interest rates. What do you think? Interest rates higher, the same, or lower at the end of his 4 years than right now?
Well, Okay, so if the spending continues, you have to pay for the spending. So how do you
Yep.
pay for spending? So they have to issue debt. The government has to issue debt to cover the spending because you can't tax your way out of it. That would just kill the economy right now.
Hmm.
So taxes have to remain relatively low. There's only so much you can do there. So at the end of the day, you have to issue debt. So that means the US government has to go out and they have to sell their debt on the open market. So right now, the word on the street is there is less appetite for our debt than the debt that we have that we're issuing. So then the Treasury becomes the buyer.
Mm.
So as long as the Treasury is the buyer, that can keep yields and rates low because the Treasury doesn't need to earn a yield. They can buy at cost.
Hmm.
But if you're issuing debt to foreign governments, sovereign wealth funds, the more that we issue, the more that they're going to perceive the risk potentially, and the more yield they're going to want for that investment. So that's the real question is what threshold will, the Fed and Treasury place on the yield that they're issuing the debt versus buying it internally. So that's really the key to watch there.
Yeah, I'll come out and say that I think interest rates are higher in 4 years than they are now. Again, I worry about the 30-year mortgage, and it starts with the 10-year, as you know. I think the 10-year this morning is at like 1.07, so it's a little off where it was. But I think the 10-year is north of 1.5, and that may not
Mhm.
sound like a lot, but that's 50% move. And I
Yeah,
think that
that'll push rates up double what they are now.
yeah, so I think that's significant. And I don't think it happens this year. I think we have a year to buy and maybe a year and a half, but 4 years, they're certainly higher than they are today, in my opinion.
And for everybody listening, if interest rates double, so they're in the low threes, high twos, it's not unforeseeable for interest rates to get into the fours and fives. So
Yep.
if they get close to doubling, that's going to cut real estate values down 30%, you know, across the board. So, that's how you get a market collapse in real estate. That's how you get a market collapse, in general when that kind of stuff starts happening. But it really boils down to how much debt are they issuing and who's the buyer and what are the rates that they're buying at.
Yeah, I don't know if real estate crashes 30%. What I will say is it's all about payments. This whole
Hmm.
argument about real estate and values is nothing to do with values. It's all about payment. But you're right. An interest rate at 2.5 is very different than an interest rate at 4.5. And
Hmm.
what is going to happen is affordability will drop, and you'll go from, an affordability of 45% to 20. And once that happens, as we saw in '08, values have to come down, right? They'll be sticky on the
Yeah. So
landlord, all of that. But yeah.
it's payments for buyers. So if you're
Yep.
living in a permanent residence, it's all about your payment, what you can afford. For some people, others are paying cash, but for most people, it's a payment
Yep.
vehicle. For investors, is cash flow. So
Yeah.
the lower the rates, the higher the cash flow, the more you can pay for a property.
Hmm.
So when that changes, values of income properties change.
Yep.
And so it's a trickle down effect in all areas. And where the ones that it really, really affects are people that are buying on interest only loans for the next 3 to 5 years. If rates do go up and they start resetting, then that can trigger, a lot of different things. So it's going to be really interesting to see, the neat thing now is, the people that are making policy are very sensitive in understanding the effect of interest rates on the economy. They know all areas of it. They know the results and what's happened whenever they've tried to pull the foot off the gas of monetary easing, all or quantitative easing and all that stuff. Um, we are in uncharted territories in a lot of ways. So nobody knows the real answer, the real effect, or the real outcome of what we're doing. And nobody knows how far can we go
Yeah.
with this spending and the debt and things like that. We just don't know.
Yeah. The last topic I want to ask here, and you may not have an opinion on it because maybe it's just out of your radar. But when you think about, okay, the dollar is going to get hit because we're, 20% of the dollars created in the last 12 months. We're probably going to do it again this year. Lots of dollars created. Do you go international, right? Do you look to take a percentage of your net worth or a percentage of your investments and go, you know what? I'm going to go emerging markets, or I'm going to go Europe, or I don't know. I mean, do you think like that at all, or do you just stay domestic?
I, you know, for me in
Yeah.
my world, I stay domestic. I've never been an international investor. And one of the things that no matter what happens, this is a global economy. So it's no longer just about the United States.
Sure.
We are the leading economy in the world. China may surpass us in terms of production and things like that, but they'll never be a world leading economy. You just can't be when you're a corrupt communist in government. You just can't. So the thing to understand is everything's interconnected globally, worldwide. So if economic Armageddon happens, people are going to be looking for the safe haven, which is the United States, because we are still a country ruled by law. And we saw that play out in what's going on. At the end of the day, the law reigns supreme in this country, which is what makes us the greatest nation on the world, and we always will be.
I don't know of a better way to end it than there. I think that is very well done. I want to thank you for these 3 topics, Greg.
Yep, it was good to be here.
Thanks, buddy.